Before you get to that pro level of Forex trading, there are basic things which you are supposed to know as a Forex trader. It doesn't matter how experienced you are, or it doesn't matter the number of years you have been trading. You can't get to that top level without knowing these basic things. So on today's video, we shall be covering what is a bid, the ask, the spread, and a pip when it comes to Forex trading. Hello everyone and welcome to my channel. My name is Ndemazeah Godlove. On this channel, we share everything about trading, personal finance, and tips to help you stay profitable as a Forex trader. So if this is your first time coming to my channel, or if you have been watching my content and you haven't subscribed, please hit the subscribe button below so that you can be updated once I come up with content like this. So on this lesson today, this is I think the number 6th lesson on our Forex course, the Forex from beginner to pro course. So on this 5th lesson, we shall be covering what is a pip, what is the bid, the ask, the spread, and the pips when it comes to Forex trading. So on today's video, we shall be covering how to read a Forex quote. This is important, how to read a Forex quote. We shall cover what is the bid and the ask price when it comes to Forex trading. We shall cover what is the spread and short. We shall also cover things like the short, the long, and the flat terminology in Forex trading. Alright, so at the end of the video, you should be able to know how to read a Forex quote. If you see a Forex quote, how can you read it? If there's a quote, if a quote is presented to you, can you be able to tell which one is the bid price, which one is the ask price? Can you tell how many number of pips? So those basic things are things we have to cover on today's video. So let's go to how to read a Forex quote. So if you see a Forex quote like this, how do you read a Forex quote? All right, because when you see a particular currency, when you see a quote it's a quote. You can also call a quote. A quote is also known as the currency exchange. And the quote, let's just take Euro USD as an example. If we take Euro USD as an example, so on this quote, if we take Euro USD as an example, you see that the quote or the exchange rate between this currency pair is 1.1302. All right, 1.1302. It means for you to be able to buy €1, for you to be able to buy €1, you need 1.1302 of the United States dollar. All right, it means you can see it's written, say €1 is worth 1.1302 of the United States dollar. Meaning, since the quote between the United States dollar and the euro and the USD is 1 point something, it means the base currency is more powerful. That means one of the base currency is equal to 1.13. So you need more of the second currency, you need more of the quote currency to be able to buy the base currency. All right, because this is the same currency we're talking about. We're talking about Euro USD, which the exchange rate or the quote between is 1.1302. So you see, so for you to be able to buy €1, so one euro is equal to 1.1302 US dollar. So that's the simplest way you can be able to read this quote. So €1 is equal to 1.1302 US dollar, meaning the United States dollar is weaker than the euro. All right, so that's how you read any particular currency. That's how you read any quote. The base currency, the quote is always predicted, or you read the quote based on the base currency. We've already spoken about base currency. We've spoken about the base and the quote currency. So here, our base currency is the euro, and our secondary currency is the United States dollar. And if you see Euro USD equal to 1.1302, it means for you to be able to buy €1, you need 1.1302 of the United States dollar. So that's how you read any quote. So let's just take another example. Let's take Great Britain pound USD. All right, equal to 1.5241. All right, so just seeing this quote, can you tell me which currency pair is stronger? Just seeing the quote, Great Britain pound USD equal to 1.1524. Just seeing this quote, can you tell me which one is stronger? Obviously, the Great Britain pound is stronger than the United States dollar, because if you want to read this quote, you need, for you to be able to buy 1 Great Britain pound is equal to 1.5 United States dollar. All right, so you need more of the United States dollar to buy 1 of the Great Britain pound. And now let's take something now like this. Let's take another one which is not stronger than the United States dollar. Let's take this other one, which is USD JPY. Okay, United States dollar Japanese yen, which is equal to about 10.1. About 10.1. So can you see? So just based on this, which one is stronger? This is a situation where the United States dollar is stronger, right? And the United States dollar here is the base currency. So for you to be able to, so if you want to expatiate on this particular quote, it means 1 USD, 1 United States dollar is equal to 10.1 Japanese yen. All right. So if I bring, let's just say, for you to be able to buy one United States dollars, so I have a dollar here. If you can read this quote, it means this particular dollar which I have, this is $100, but let's just assume this is $1. So this $1 which I have, for you to be able to buy this $1, if you're in Japan and you want to buy this $1, you need 10.1, you need 10 Japanese yen for you to buy just $1. All right, so that's how you read any currency. You read any currency quote. That's the same way you read it. So let's go to what is the bid and the ask price. So sometimes when you open your MT4, you see something exactly like this. When you open your MT4, anytime you open your MT4, you see something exactly like this. So how do you read? How do you read this particular quote? So this is where we shall be talking about the bid and the ask price, all right? The bid and the ask price. So if you can see this particular quote, this is the same thing you will see on your MetaTrader 5 anytime you open it. If you can see this particular quote, the first one we have here stands for the base currency. We already spoke about this, stands for the base currency. So the euro stands for the base currency and the United States dollar stands for the quote currency. All right, stands for the quote currency. And the difference between, and if you can see inside this red place, we have the first digit we have here is 1.30642. And if you can check inside this place, we have another price. So we have two prices. Each currency quote has two prices. You have what they call the bid price and the ask price. So the first one here is what they call the bid price, and the second one here is what they call the ask price. So if you can see, we have another price here which is 1.3065. all right, so we have two different prices. The first price is the bid price and the second price is the ask price. So what is the bid price? The bid price, when it comes to any particular currency, is a price you are ready to buy that particular currency. So the bid, you are ready to bid on that particular currency. So the bid price stands for the price you are ready to buy that particular currency pair. So if I come here, the first price stands for the bid price. The bid price. So this first price, 1.30642, is the price we are ready to sell Euro USD. And if you see, we have a second price. So the second price, which is 1.3065, is the price we are ready to sell. So the bid price is 1.3064, and the ask price stands for the price you are ready to sell that particular currency. All right, the bid price is the price you are ready to bid for that currency, to buy that particular currency. So the ask price stands for the price you are ready to sell that particular currency. And just to talk about the difference now between the bid and the ask price is what they call the spread. All right, and the difference between these two prices, the difference between the bid and the ask price is what they call the spread. For this example, you can see we had the first price, the bid price was 1.3064, and the second price, which is the ask price, was 1.3065. So what is the difference? The difference between the bid price and the ask price is equal to what? If you subtract this from this, you have what? 1. So the difference between the bid and the ask price is measured in terms of pips. All right, it's measured in terms of pips. So if you subtract this and this, you have 1, which is called 1 pip. And that 1 pip stands for the spread between this currency pair. So you see, that 1 pip stands down for the spread. So if you see any currency quote, any quote you see, to measure the number of pips on that particular quote, you just subtract the ask price from the bid price. The bid price is the price you are ready to buy that particular currency pair, and the ask price is the price you are ready to sell that particular currency pair. As simple as that. So that's how you can determine the bid, the ask, the spread, and the pip of any particular currency pair. So if I ask you what is the spread of this particular currency pair, it is 1. It is 1 pip, all right? And what is a pip? A pip stands for percentage in point, which is the smallest increment of any particular quote or any particular exchange rate, all right? So with that being said, you say, okay, what is a spread? We've already mentioned earlier, so now we just elaborating. What is a spread? We already mentioned the bid price is the price you are ready to buy in a particular currency pair, and the ask price is the price you are ready to sell that particular currency pair. And what is the spread? The spread is the difference between the bid and the ask price, and it is measured in terms of pips. As simple as that. Any other thing here will just be explaining the same thing. All right, any other thing here is explaining the same thing. You can see here we have Euro USD. The first quote we have, or the first price we have, which is known as the bid price. This is our bid price. It's equal to 1.1051. And the second price, which is our what? Our ask price. Our ask price is equal to 1.1053. And what is the spread? The difference between the bid and the ask price. If I subtract this from this, I'll have what? I'll have 2. 1.103 minus 1.1051. I'll have 2. And the 2 here is, so the spread is equal to this. You can see we have it here. The spread is equal to this minus this. You subtract this from this. You have 2. 2 what? 2 pips. And the spread is measured in terms of pips. So the difference between the ask and the bid price is what they call the spread, and it is measured in terms of the pips. As easy as that. And you can see here we have 2 different countries represented. We have the Euro, which represent the countries in Europe, and we have the United States. We have the United States. And their currencies, the first one is the base, the second one is the secondary currency. The first price is the bid price, second price is the ask price. Difference between the ask price and the bid price is what we call the spread, which is measured in terms of the pips. All right? So I hope we've made that one very clear. After that, let's go to what they call short, long, and flat terminology. As a Forex trader, you must be able to know this short or this simple terminology. So if you just wake up one day and you open your chart, and maybe you're talking to a friend, and they say, okay, I went long, or I went long on on Euro USD, and I went short on Great Britain Pound, Japanese yen. What does that mean? So short, when you are talking about Forex, if you say long, long is the same as buy. So if I say long Great Britain Pound USD, means I'm telling you to buy Great Britain Pound USD. Those are the terminologies you hear every day. So long is the same as buy, all right? Long is the same as buy. As simple as that. Long is the same as buy, while short is the same as sell. If I say short the Great Britain Pound or short gold, it means I'm telling you to sell gold. If I tell you long Great Britain Pound USD, I'm telling you to buy Great Britain Pound USD. And if I'm telling you I'm flat on Euro Japanese yen, remember I'm calling the currency. If I say I'm flat on Euro Japanese yen, it means I have no open position. I have no open position on that currency pair. So we have long, which means to buy. We have short, which means to sell that currency pair, and you have flat, which means you don't have any open position on that particular currency pair. So those are just some terminologies we have when it comes to Forex trading. All right. So with that being said, we've come to the end of this particular lesson. So on this video, we've spoken about what is the bid price, what is the ask price, what is the spread, what is a bid, what is the PEEP, and what are some basic terminologies like long, short, and flat when it comes to Forex trading. So you should be able to ask yourself if you can be able to know most of these terms. So if you've gotten some value from this video so far, please leave a thumb up on the video. If you've gotten some value from the video, leave a thumb up on the video. Also subscribe to the channel if you haven't done so. Subscribe to the channel so that you can be able to follow us along this particular series or along this particular course. And also stay tuned, follow this playlist, which I'm going to leave the link here. Follow this playlist so that you can watch all the videos on this Forex course. Until then, I'll see you guys on another lesson. Peace.